the process. So in any business that you work in or you plan to venture into, you kind of have to create a campaign. Okay? And a campaign is basically another way of saying dedication or commitment. So the actual definition of a campaign is a connected series of operations designed to bring about a particular result. So we discussed the operations involved in getting into a gap reversal trade, and if we follow it, then it's going to bring about a particular result. However, we don't know what the probability of success is. The result is profit, but we don't know what the probability of success is. And every human that's new to trading wants 100% guarantee. So the only thing that's guaranteed is your death and your taxes. Everybody has to pay their taxes, and everyone's going to die. Okay, that's just the truth. So nothing's 100% other than those two things. You don't even know if your parents are even your parents, right? There's no guarantee. Just because a piece of paper says that they're your parents doesn't mean that they're necessarily your parents. Okay, so the purpose of this campaign is to combine some non-correlated strategies that we've been kind of teaching here in the Discord room, and then have one specific non-correlated strategy that's taking advantage of the morning volatility. That's the gap reversal, right? Because the mornings are pretty crazy. They go up and they go down. So we want to take advantage of that, especially when the VIX is up here in around the $20 range. So one particular structure in the market that we can take advantage of, or try to take advantage of, or attempt to take advantage of, is a gap. Okay, gaps are created either in the pre-market or the after opening, regular hours, trading hours. And everybody kind of knows, that gaps have a tendency to fill more often after Wednesday and a little less between Monday and Tuesday. So a gap reversal strategy, like I said, is a very popular strategy. But in this campaign, we're naming it gap reversal, but we're going to have it using it with the market internals. We're going to combine it, because that's what everybody who's a professional trader kind of relies on, the market internals, right? Remember Walter Deemer? I don't know who Walter Deemer is. I just found him on Twitter, and then he's just talking about Yuval, and obviously gives one-line detail about the Yuval, which has no meaning whatsoever after the fact, right? We want to know what happens before so we can make money. But the market internals is a very important set of tools you're going to have to master, and we went into talking about the starting balance of 1,500, depending on how much money you have. But I think 1,500 is an acceptable number to use for a campaign like this. So I'm already up 4,800 just using 1,500, but that's because I took a couple of Tesla gap trades last week. That paid out pretty big. Okay, and then the particular result that is going to be expected by everybody with 100% guarantee is $6,800. That is the resulting gross balance, or the net balance. I think that might be profit. Let me just double check. So assuming we do this 5 times, the balance is going to be over, the profits are going to be over, definitely over 6,000. So I probably just lowballed the number to 6,800. Okay, that's resulting profit. So not resulting profit. Gross profit. You know why it's gross? Because you're going to have to pay tax. Net profit will probably be what? Assuming you don't lose everything. Net profit, let's just say, well, it depends on if you're mark to market. Let's just say 50%, right? So, okay, net profit of 3,400. You go, oh my gosh, Roger, why is it 3,400? Ask your accountant. Okay, if you have mark to market, you're probably going to get closer to 6,800, or maybe, sorry, probably around gross profit as a LLC plus mark to market. No LLC. No mark to market. And the probability of, I mean, you're going to, no matter who you are and what you're trading, you're going to get 6,800. It's then you have to probably, report it. Probability of getting audited is really low, and if you get audited, then you're going to just get a whole bunch of trouble. So you need to follow the rules of engagement. Maximum profit and maximum benefits is under an LLC mark to market for trading options or trading anything. Okay, probably most people didn't even know that. Okay, so the next part here is the advantage of a gap reversal. The gap reversal advantages that I mentioned before, it doesn't really matter. Like, first, the timing part is pretty straightforward because you're kind of only focused on the first 30 minutes before the market and the next two 30-minute candles, which is an hour. So an hour and a half of your day is literally kind of invested in this type of strategy. But if you do it precisely within a certain time window, like 9:25 a.m. Eastern time, then I think you can get away with just trading 35 minutes to 1 hour, right? And if you get your entry right, then you can walk away and come back an hour later and you only literally traded for 10 to 20 minutes because you have a sell limit order that's going to try to close it automatically at 35%. So the advantages in this campaign is, first, it's time friendly, right? You don't want to sit all day in front of the desk, just an hour or two. Your entry and profits are defined deterministically. So with the deterministically, not with precision of 2 decimal places, but precisions like approximately at where you think you want to get into, like narrow it down. Okay, so that's a deterministic approach to picking your strike. Rather than just guessing which strike you're going to get, you can kind of deterministically figure it out based on the gap. And then, like, for example, if you don't know what levels you're looking at, what premiums you're looking at, here's a couple of ideas: 0.62 to $1. And sometimes they won't fill at $1, which means you picked the wrong strike. So you might have to switch your strikes to something higher or lower just so that you can satisfy your position sizing, or just reduce the number of contracts. Another advantage that I mentioned briefly at the beginning is that it doesn't really matter whether it's a bear market or bull market. We had a short-term bull rally this morning because the NASDAQ and everything else was opening up plus 2%, right? But we still opened up puts in Netflix, right? Was it Netflix? Yeah, it was in Netflix. So it doesn't matter. What matters is just the return on the investment, which is predetermined, right? It's not a swing trade, but you can consider it to be a swing trade if certain conditions are met, meaning that you have more than one contract, and you have maybe like the VIX starting to bounce, going green, and you have a high TRIN value around 2. Okay. So, and it also matters on how much profit you generated in the when you close the first tranche of those contracts. So if you got lucky and the thing started to accelerate and fill the gap really fast, and you got like a 200-300% return, then yeah, you should entertain the idea of holding that one contract for a runner, because it's pretty much free. That depends on where you are in your balance campaign. So if you're starting off, maybe you want to take those profits. When you're already matured to the point where your balance is at 6,800, then yeah, you probably want to take maybe 1 or 2 shots on those one runners, which should not really affect your account, and you shouldn't be too worried about it going to 0, because you're already 3 or 4 times higher than your initial starting balance. Some of the disadvantage of the campaign is that, well, one in particular is this is a campaign that trades only one time, once a day, okay, or twice, depending on how many contracts you close. So that's going to be a problem for a lot of people, because psychologically you're kind of dedicating your time to this campaign, trying to master it, and you're only yielding 35%. And then you go over and look at some other Joe Schmo, and he just turned $100 into 1 million. And you're like, shit, like, this sucks. I want to make $1 million too. Yeah, it doesn't work like that. I wish I was 6'6" and named Michael Jordan, but it doesn't work like that, right? So the campaign here, like I mentioned before, is a mastery course where you're kind of self-disciplining yourself to reach a particular result. That's it. And if you want to trade vicariously, right, you want to copy somebody because you don't think you can do it yourself, yeah, then we got some issues, because those, I would never want to work with somebody who just copies people, right? Those are so annoying, those type of people. But I've heard the same argument, shit, if you copy somebody and makes you $1 million, then why not? Well, there's a lot of discussion behind that type of trading. And to this day, I still haven't met anyone who's done that. And if they did, I don't think they've learned a lot. I don't know what would happen after they make that money. Probably lose it all again. Okay, so then, yeah, I think that's the only disadvantage. I guess another disadvantage that there might be a day where we don't take a trade, like yesterday. So yesterday, Monday, nothing really gapped. They just opened up flat and then just rolled over. 35%, is this a disadvantage? Right. Well, if your POS is greater than 95%, then some people might not think that's a disadvantage, that's an advantage. It all depends on what you think, how you approach this campaign. All right, so the campaign expectations using $300, compounding at 35% every single day. And I did that every single day because we don't know if one of those days are going to return 100%, another one does 200, and the rest are 35. So we'll just kind of like assume 35 every day. And your daily profits should increase just like it's showing here. And then your cumulative profits would end up on the fifth trading day or the fifth day, the fifth trade, the actual trade. So this could be, number 1 could be Monday, 2 could be Wednesday because you skipped 2 could be Wednesday and you skipped Tuesday, but 5 trades in a row would end up with a gross profit of 1,424 approximately. Okay, and then you do that 4 times, then that would take you to around 6,000 bucks. Okay, so that's the whole point. That's the expectation. So the time duration is going to be 4.5 weeks. Average profit is $188 for the first 10 trades approximately. Initial position size is 300. Max position size is 20% of the balance as it grows. The absolute min position size is $300 regardless of the account balance. The minimum position size is 10% of the running balance. And the adjusted allocation every week, for every profitable week, the allocation gets adjusted because you have to. That's just, you don't it's very, what this sentence here means is that when you get a job promotion, you don't get it without any additional responsibility. Okay, so every time you do well in your job, you're going to get an opportunity to get promoted, which means a higher salary, but you don't get that for free. You're going to have to take a little bit more responsibility, but something that you can manage, oversee it, which could also mean that you're spending a lot less time, but the risk will be there for sure, and that risk will probably be your job. Okay, so the juicy part, this is the secret sauce. It's right here, and we'll talk about that in the Netflix trade today. And like I said, the strategy is pretty much a gap reversal, but we're using market internals to help us get a better edge. That's right there. We put in sell limit orders of 35% immediately after opening up the contracts, right? And then you get a return of 35%. We'll keep a ledger. Like I said, the disadvantage or advantage is trading once a day, depending on the number of contracts. And then yeah, if you have a loser, right, then the trade is done. It kind of ties in with 0.5 that you're trading once a day, because after the gap doesn't fill and you're losing, you're drawing down. So your $300 trade turns into $125. You just close it, right? You'll know when you're in the wrong side of the trade, and you know when the gap is not filling. So you take the loss, right? And then you're done, because the morning volatility is already passed. We're probably moving into the afternoon. Okay, so the routine is basically, like I mentioned before in the other presentations, is that we're watching the pre-market prices reset at 4 a.m. if you're up that time. And if you're not, don't worry. You can just wait till you wake up before 30 minutes before the market opens, which would be 9 a.m. Eastern time. Well, yeah, 9 a.m. Eastern time, 30 minutes before the market opens. And you can look at what's gapping up and what's not gapping up, right? So those gaps are going to be the trading opportunities that we're going to go and attack. That's the campaign. Now point number 3 is at 6:20 a.m. Pacific time or 9:20 a.m. Eastern time. This is the mastery part where we're looking at the VIX and the futures, and also the market internals, to kind of get a better sense of what is going on. So we don't look at the internals, because the internals don't move until the bell rings, right? So maybe right around here between 9, evaluate internals and send out trade alert, which will be posted Okay, so 6 o'clock you wake up, you get your coffee. Oh my God, I want to make money because I want to make money. And then 6:20 a.m. to 9:20 a.m. Eastern Time, Pacific Time, Eastern Time, I'll come on voice or just type out just a simple evaluate the VIX and the futures and post it, right? To get everybody, when I send it out and it's being posted in the trade alerts here, right there. So if you look at that, good morning, and I talk about the VIX futures rolling over hard, right? That's very, very bullish. That's going to create some sort of reactions in your brain to figure out whether you really want to take a gap reversal trade when the market's ripping hard. Okay, so what did I say here? Futures are ripping higher, as mentioned, with the VIX futures rolling over hard. Monday's close was very bearish. However, we had a very bullish TRIN profile. So the weak VIX and ET setup in the Nasdaq provided some clues of a bullish rally and a turnaround Tuesday. I continued to hold, so I'm holding Adobe. Even with the early indications of a turnaround Tuesday, I was not able to open up positions into the close, and that's because I couldn't really figure out whether this was going to go sell off hard. But the TRIN is the TRIN, so you got to trust in the TRIN. It appears that there are more than 3 Feds speaking, so that creates more volatility, and so trading today will not be that clean because if you assume the gaps are going to fill fully, then you're going to get enter into a loss, and it may end up being choppy like Monday. So it was a little choppy when Jay Powell spoke, but it then continued to rally because of the nature of the structure of the Nasdaq. So with that being said, we had 3 competing strategies at that present time. ET, gap reversals, you name it, we've got almost all of it. The gap reversals don't necessarily work very well when the Nasdaq is ripping toward the 21-day moving average. However, we're not assuming the gap reversal is going to generate hundreds or thousands of 10x or 100x. We're just getting 35%. Okay, so then at 7:10 a.m., which is not 10:10 a.m. Eastern Time, I opened up 3 contracts of Netflix, which I think I could have got at $1. Okay, and the TRIN here, I actually typed in the TRIN of 1.61. So that was the confirmation, and that TRIN was confirmed at within the first 3 minutes of the day. Okay. So the TRIN hit 1.61, created kind of like a top there, and then started to roll over. And then we opened up that trade in Netflix at 1.15. And just like I said here in the point number 3, you type in 35% profit of 1.15. So that would be 1.15 times 1.35. So 1.15 times 1.35, that gets you 1.55. So we closed at 1.59. So you could have put in a sell limit order at 1.55 and then gone filled, assuming your entry was 1.15. You might ask, well, Roger, I got 1.16. Well, Roger, I got 1.14. I got 1.17. So that's going to be a little bit tough, right? So you can see I was 4 cents over. So, you can kind of You would have to figure that out. This two decimal place precision is pretty damn hard. Okay, and then yeah, so then I closed off those 2 contracts, and then I closed off the other one at 125, which is still a profit. And then I opened up a Tesla trade, which I'll discuss later. So this is, I've been doing this campaign strategy, and it's worked very well. And I highly recommend you to master this. And then once you build your account higher, you can start taking some bigger trades using the profits generated from the gap reversal strategy. Now, if you take bigger trades, make sure you position size. Okay, and yeah, here May 12th, this was one on Tesla when it gapped down 4%. And this one returned more than 35%. Okay, so 1.19. Maybe I should just type it in here. Entry 1.99. Then sell limit order at 1.99 times 1.35. It's 2.68, right? So you got 2.8. And then, because I had 2 contracts, and I think the VIX was moving higher, good to close one more contract at 4.6. So that's $200, and I closed one contract at 280, so that's an $80 profit. And then I closed another one at 460, so that's a $2.60 profit. So 260 plus 80 is 340. That's $340 on 2 contracts on Tesla. That would be way above the daily trade expectation, 2 times that. That's why compounding the 5 trades, 35% for every single day makes sense, because you could get a scenario where you open up 2 contracts and one of them ends up becoming 2, 3, 4, 5x, right? May 13th, I think we got into another trade here. What was this? Tesla again at 735 puts. That dropped from $19, and we're expecting it to go to $1. So we bought the 720 puts because the 735 puts actually dropped down to $3. So I had to change my strike to 720, and I bought those at 230, and then that closed the position. Then I closed the position again. With entry of 230. That would be 3.10. And it gets to 3.10. Okay, so that's $230, and you close it off at 310. You got 2 of those contracts. So that would be about like $90. That's a $180 profit when you closed off those 2. And then I think the Tesla, that last, closed 2 contracts, and I closed the last one at $3. So that was a profit of so 2 contracts closing off at what was it? What did I say? $80. So that's 80 times 2. That's 160. and then you get another one, close out that last contract for $70. Okay. So that's a profit of 230. Right? So did I do the math right? Yeah, 230, right? So just in these, so this one was the profit for this one was 199 minus, was it 280? So it's 80 cents, closing off one. So that's $80 profit. And then we close another one at 260. Right? That's 340. And that's just using approximately, that was around two contracts, that was $400. And this one was using a little bit more, to 690, and that's because I had profits already from the previous trades. And then finally put another one here. Okay. And this is May 17th. And our entry was, oh, I should change the entry here. This was that's correct, 230, right? Yeah, 230, entry 199. This one was an entry at 1.15. So then that was two contracts closing at 1.59. 1.15 closing at 35%. Gives you 155. But I closed at 159. Because I was thinking the gap was going to fill. So that's two contracts, one contract closing at $44. And then the second contract closing at $10, which covers the commission. So that's a profit of $54. So then when you add just up those, what, May 12th, May 13th, May 12th, May 13th, and May 17th, those three trades. So we'll take this one here and say 3 days of gap reversal trading. You got day one, or May what? May 12th. And this is kind of like the ledger, right? May 13th. No trade on Monday. And this is May 17th. Okay, so then the cumulative profits, or I should say gross profits for 3 trading days. So I'll add that. So 394 plus 230 is 624. Okay. Performance relative to expectations. So 3 days would get us around here. Okay, so what does that mean? It means that we're 624 minus 556.86. 624 minus 556.86. We are $67.14 over the expectation, with a POS of greater than 99%. So nothing's 100%, right? POS, probability of success. Okay, so I created this back in May 12th, and basically just provided a proof of concept of this gap reversal trade. Maybe it ends up becoming turns from 99% to 60%, and maybe the profits are higher, who knows? But the proof of concept is so far, I mean, we're not going to put a whole bunch of confidence in 3 trades, but keep in mind, this is my 7th trade, and I'm already up quite a bit. But this is working, so there's definitely nothing I guess maybe I need to spoon feed people a little bit more to get exactly the right entry, but that the market is moving fast, so you better master this. And I think there's a lot of room for error for this type of strategy, because the profits are really low, 35%. Okay, so this document is going to keep on growing. It's going to be a living document where I kind of I'll review it from time to time and see if the wording and the description makes sense. Also, the order at which it's being presented makes sense. But from scratch, from a PowerPoint presentation that had absolutely nothing to where it is right now, and then also proving the results with my statistical background, we can see that the cumulative profits, and then looking at the actual profits, is definitely in line with the expectations, and 4.5 weeks later, we should see the result of the process and the procedures resulting into a gross profit of $6,800. Okay, thank you very much for your time, and have a great day.